What tax advice would you give to the first-time real estate investors?
Real estate is one of the complicated tax situation, right? Real estate investment could get very complicated. So you want to understand the tax implications of that investment on the very first place. Whether you will be allowed to take the passive losses or not, what kind of entity will it be, what kind of investment return that you were expecting, what kind of taxes you would owe, and what will be the compliance. So you want to watch out for all these things. Another key component to this, the whole entire tax structure or the tax implication would be claiming the depreciation. You want to know how the depreciation will be calculated on this investment. Another thing to look into is compliance. How would this investment be reported on your tax returns?
Right.
Whether you are going to get a K1 from this investment or you have to report it on Schedule E, you need to know that. There are a lot of benefits to the real estate investment. I insist there are a lot of tax benefits to the real estate. Number one, depreciation. There is another one which is called QBI deduction. So you get to deduct 20% of net rental income as a deduction and you don't pay the tax on that.
Right.
There is another, there are bonus depreciation as mentioned earlier. And then I would say that on the sale of the property, you pay a little bit of the depreciation recapture, but the most of the gain is long-term capital gains, which is a preferred tax rate compared to the ordinary tax rate. So these are the items that I would advise you on, that keep the detailed records, understand the tax implications, and claim as many deductions as you are legally entitled to.
Check the full episode on our YouTube channel and on Apple Podcast.